That's right. About 20% of Apple sales are in China. They're already down quite a bit. I think for them to go down half is unlikely, but it's possible if you get a real anti-American fervor going in China. At this point, there aren't tariffs in China on Apple products, but things aren't heading in the right direction. And Apple's very much caught in the middle because there could be U.S. tariffs on their products. And we calculate maybe $100 to $150 per iPhone more expensive. And Apple either has to price up or take that hit at margin. So at this point, we think maybe 10 to 15% of earnings are risk, but worst case might be closer to 25 or 30%.
Steve, in a recent note, you outlined 3 existential threats to Apple, one of which was China turning against them. What are the other 2, and have they played out as well?
Well, the other 2 is, first of all, the attack from below, a cheaper phone that's at a similar performance level. This has been a long-term concern. It really hasn't happened because Apple's kept that premium brand. But you can argue in China it is happening today. I mean, Huawei has a great phone at a lower price than Apple, and Apple is losing share in China. So I'd say in China that one might be occurring. The other one is if something were to go wrong with the App Store. A couple years ago, we were concerned about Facebook messaging, for example, cutting into the App Store. That has not happened. But more recently, you've had the Supreme Court give the go-ahead in terms of consumers suing Apple for monopolization in the App Store. That'll take years to play out, but you've got a number of issues, and then China being the third. So there are plenty of reasons that I think it's too soon to be buying Apple here.
Too soon, Steve, to be buying it? I mean, so what sort of a valuation discount do you think is appropriate beyond what already is in the stock?
Well, the stock got up to about a market multiple at its peak, and it's backed off a bit since then. Our target price is actually 200, so I think over time it could get back toward a market multiple. But in the meantime, you've got fairly poor earnings momentum. You've got a lot of uncertainty. As we just discussed, you could have further earnings downside. So I think the risk reward here is slightly negative. So you could still have another 10 or 15% down in the stock. Ultimately, I think Apple's very buyable, but I'd like to see it at a lower level. Also, I'd like to be closer to new product. You're not going to have anything in the iPhone this fall that's probably that exciting. And even next year, 5G, I'm not convinced is going to be a huge catalyst.